if your spouse was engaging in some shenanigans,
you got 6 years before.
Years,
yeah, 6 years.
And
before.
if your name is on there, then jointly and severally.
6 years from when it was filed or from when the fraud is discovered? Just a side note.
The start.
Are you? Do I need to be
I'm
worried?
just asking.
I'm just saying. All right.
They want to know.
They want to know.
Yes,
All right. Welcome back, guys. This is Cases and Cocktails. This is episode number 28. We've got a special guest with us here today. We've got Mr. Michael Boatright of Mr. Michael Boatright CPA, but more importantly, his new brand, which is Taxes, 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 right?
More or less. That's right.
We've got my beautiful wife here with me again. Jay, how are you doing?
Good.
Fantastic. You ready to talk about taxes?
I am. It makes me so excited.
I know. I'm so excited too. We expect this to be our #1 episode, most enthralling, most engaging, and more importantly,
Most subscriptions lost. That's what I'm shooting for.
That's fair. That's fair. All right. But in order to talk about taxes, as you've always told me, you have to have bourbon. And so we're going to have a drink today. What kind of drink we got?
Bourbon Coffee Flip. It's Buffalo Trace, cold brew coffee, and some simple syrup.
Epic. You go with bourbon?
Love it.
Nice. Let's do this thing.
Cheers. It's very tasty.
You know, it's pretty much just like bourbon in your coffee. It's like
Just mornings.
I was going to say it's a Tuesday for you. Is that right?
Yes.
Yeah, that's fair. That's fair. All right. First and foremost, bourbon guy, Scotch.
I like bourbon. I prefer rye. I would say.
Okay.
But a good bourbon is yes, absolutely love it.
I have seen you consume copious amounts of Scotch.
I do like Scotch too. Yes,
Okay.
by itself.
Okay.
Yeah,
You don't like
the
it in
rye
coffee?
and the bourbon. I like. You got to put something in it. Make an old fashioned. Or like something like this. It's great.
All right, but you sip on Scotch.
We actually had an enormous, or not an enormous, but just an incredibly strong mint julep. Watching the
Derby.
the Derby the other weekend. We went to a party, and I swear that in the little, they put that in a metal cup.
Yeah.
And I think they do that because that way you can't see how much they're
Isn't
pouring
it?
in there, right? And I'm pretty sure that was like 8 ounces of bourbon. And
Nice.
a little bit of whatever else they
mint
put
julep.
in there, right?
Yeah.
So
Did you wear a big hat? I see you as a big hat guy.
I'm not a big hat guy.
Not a big hat guy.
surprisingly. Right. Yeah.
That's. Did you get that vibe?
I mean, I thought.
Yeah, you thought.
I thought
so.
Tara wouldn't
Yeah.
let him go.
I had
that way.
a not a seersucker jacket. It's like a plaid jacket.
Okay,
So
yeah.
It was the loudest jacket that I have.
Oh, nice.
Which I couldn't hear it, but they said it was loud.
So stupid. That's the first dad joke that he's got. All right,
I got more.
We're
where
gonna.
that came
We're gonna. I
from.
was gonna
That's
say we're
right.
gonna keep count. All right, we'll keep count. See how far we get. Thanks for coming on.
Thanks for
Not
having me.
only are you the person that's in the only other professional in close proximity to me on a daily basis, other than my beautiful wife. Technically,
Alex is next door.
yeah, we don't. We said
He's not
professional.
professional.
So we said professional.
Oh wow. Hot sports opinions. Okay.
You actually run and own your own CPA firm.
That's right. Yeah, I'm the managing principal of Boatright CPA.
Nice.
We're a full service accounting firm. Provide advisory and tax services, especially on the professional or personal financial side, and helping business owners. That's kind of our bread and butter.
Nice.
We have a strategic partnership with the wealth management firm next door also, and that's allows us to bridge the gap between business owners and the way that they run their businesses, and taking the business results and using that to further and accomplish their personal financial goals.
That is a lot of words.
It's called an elevator pitch. They teach you how to do that in grad school and in MBA school.
Nice, nice.
If someone wanted to find you, how would they find you?
They can search on the web, Boatright CPA, BoatrightCPA.com or Boatright.CPA. We actually
Nice.
paid for that top level domain, which is
Just crushing it.
fantastic.
How's the SEO on that?
Well, funny enough, there's another Boatright CPA
Of course there is.
Corpus Christi, and
Really?
so every tax season we get a couple calls
from
asking like for a status, and we're like, you are not our client,
client,
and they're like, you're Boatright, and we're like, we are,
but not that.
we're not David Boatright, who, if you're watching, nice
He
to
is.
meet you.
He's a big
Shout
follower.
out.
Yeah, he's a big follower.
I'm sure that we are, competing with each other somehow.
That's
So,
fair.
yes.
That's
Are you
fair.
related?
Not related, no relation.
Are you
That's right.
sure?
Fairly sure.
Fairly positive.
Fairly
That's why he's on the. That's why he's on the Family Law podcast today. We're kind of like Maury Povich. We'll be like,
We're going to
Surprise!
do the 23 and me.
right, yes, yes, that's exactly right. You
It's
are
not
not.
as funny as you think.
One of the things that I think is important too, they can find you on the web. What about on social media? The big presence there?
We have a limited presence on social media.
Okay.
That's
All
right.
right. All right. That's fine. That's fine.
I have an X account for
Yes.
my personal.
Oh,
but The
okay.
firm itself, actually, our presence is on LinkedIn.
LinkedIn.
We do
There you
have
go.
we do a lot of stuff on LinkedIn.
Nice.
I say a lot. I think we have a post on the firm page.
Oh yeah,
A lot is
100%,
subjective
100%,
compared to the rest of
100%.
it. Yeah.
That's 100% more than
Yes,
what we know,
yeah, 100.
so-
I was going to say that's an improvement. As Kobe said, a little bit better.
A little
every
bit
day.
better. That's
That's
right.
exactly right. We, you could be like me, where we have all those things. I have no idea how to access it at all, and then
He doesn't have any of it logged in on
I
his
have
phone.
none. I can't get on any of my phone. I can't do anything
No,
else.
that's what your staff is for.
Right.
So every time I need to get on and do some kind of admin stuff for any of these accounts, I have to text the group chat
Right.
and say, what's the login?
Right.
And,
And typically the one request I have is so-and-so from high school is trying to get a hold of me. Can you accept their friend request? That's
there we
it.
go.
That's-
So who from high school?
yeah, exactly. That's exactly right.
Just checking.
Just checking. You're just checking. Thanks, babe. Appreciate that. Let's talk a little bit, not about social media. I know that's your favorite topic. But we're going to talk a little bit about taxes. Interestingly enough. Fantastic.
I can talk all day about
All day.
taxes.
Yes. Let's just go over the. Let's
Do you
just
want to
go
put
over
your audience to sleep right away?
I was going to
or
say, why don't you
wanna
just go
get a
ahead
little
and tell us
further
what
into
you
it?
think about the tax code? Let's just go ahead and start there.
It is too long.
Yes, there you go. I've always said this too. You could just use TurboTax, but apparently not.
can,
So
yeah,
that's-
absolutely.
Yeah, not a thing. All right. No, seriously, let's talk a little bit about taxes, divorce, that sort of stuff. Also, how to manage some finances during the divorce and after. You cool with that?
Fantastic. Let's go.
So typically, I want to start here first. A lot of times you have a couple, right? Two spouses, and they come to you and they hire you as their tax guy, their CPA, the man to handle all the stuff. What happens when they get divorced for you? I know what happens on my end, but how does that affect your ability to help them?
Yeah, that's unfortunately a very common occurrence, and in the state of Texas, being a community property state, we get asked a lot by married couples. The most common question is, "Hey, should we file separate? Should we file joint?" Like that's probably the number one question we get
Right.
from a married couple, even if they are not pending divorce. And due to community property rules, it is extremely rare for married couples to have a benefit for filing separately.
Right.
Just taking the combined results, you compare that, two separate returns versus
one.
joint return. Generally, the joint return is going to have a better overall outcome.
Right.
So unless there's a prenup or some other really extenuating circumstances, joint returns are by far the most of what we do for married couples. The big downside, though, is that this idea of joint and severable liability.
Right.
Right? And you're like, what does that mean? And if there is a balance due or an audit on a joint return, and there's some type of IRS action against the couple, the IRS can collect the entire amount of the tax that is assessed from either spouse.
I'm so glad you brought that up, and we can dive into this extremely hot sports opinionated topic that we're about to get into. But that happens all the time with us on our end, and kind of how we explain that, and we can walk through that here and kind of go through all that.
So people during a divorce think it's extremely important in the tax section to say who's going to be liable for past owed potential taxes if the audit comes later. And people will fight tooth and nail to say that we want this spouse or this spouse to be responsible. Does the IRS give a crap what the decree says?
This is actually a conversation that we have had
Had
professionally
multiple times.
that yes, the IRS does not care because federal law, as you guys know, supersedes any of what you guys do at the county
State
level or
level,
state level. And as soon as they sign that joint return, they are agreeing, each spouse is agreeing to be jointly and severally liable for whatever is on that return. Even though the tax may not exist at the time.
Right.
So
100%. Yeah.
there's a statute of limitations, 3 years for standard, 6 years for fraud.
Yeah.
So if your spouse was engaging in some shenanigans, soon to be ex-spouse
That's
was
right. You got 6 years before.
Years,
Yeah, 6
yes.
years.
And
before.
if your name is on there,
Yeah.
then jointly and severally.
6 years from when it was filed or from when the fraud is discovered?
So yeah, this
Just a side
the
note.
start.
Are you? Do I need to be
I'm
worried?
just asking.
I'm just saying. All right.
They want to know.
They want to know.
Yeah,
All right.
it's the later of when if you either
Of
it's
course
by
it
the
is.
due date or when you file it.
Yeah.
And so if you file on time, that actually starts the clock. If you wait to file and then you want to be fraudulent, then it actually starts at the later of the
Later,
2 days.
too.
So anyway,
What's interesting about it is that this conversation is the thing that happens all the time. We see it in divorce decrees commonly, and the way it plays out is, we do have that language in the final decree of divorce, and it says, and we allocate and we specifically identify who is responsible for each period of a tax year, right, and what the requirements are, what the duties are for the parties to do all that sort of stuff, but at the end of the day, that's a document, and so you go to the IRS to the federal level, and they go take that money wherever it comes out of,
Wherever they can get it.
Tax returns, garnishments, all this other stuff that happens, and then the parties have to come back to the state court, hire us. We then have to go to court, and we have to enforce this language, and really what it is indemnification language is what it is, right? And then say, okay, this person, by the way, who the IRS couldn't get money from, now owes me money, right? And I'm going to now chase them around. It's sort of it is.
and having a judgment in your hand, that's very valuable, right?
I will tell you, I'll tell this quick story, and I don't know if this.
Boatright has known you for a long time.
He has known
He
me.
knows there's no such
You're
thing.
going to tell one story to tell me another story.
Yeah, I am going to
That's
tell you
usually how
another
it
story.
goes.
Yeah,
Yes.
which is, and I don't know if this is an indictment of my lack of knowledge at the time, or maybe just the misguidedness of all of it. But I was in a hearing one time. This was years ago. In a hearing one time, and we're having this hearing, and we're fighting over this exact issue. This exact issue is what we're fighting over. And the judge literally looks at me and opposing counsel and says, well, I don't really know what I'm supposed to do here. And so I'm like,
Which is always fun.
right. And so like, I'm trying to explain.
Just do what I'm asking you to do is the answer.
I'm trying to explain, like, at the end of the day, right, none of this really, like, it matters, but it's not really going to matter because you're going to award someone a piece of paper and vice versa. Blah, 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 blah. And so we're having this discourse, this back and forth for, I don't know, 30 minutes to an hour. And we've proved up that there's a liability, and there's some testimony over who's paid what and who is not paid and who's been going, all this other stuff. And the judge sort of stops us and he says, well, we're going to go to break. And over the break, if any of y'all know someone that could give us answers, so I'm in the hallway, and I'm in the hallway like, Boatright, can you answer this question? Yep. And he's trying to tell me. I'm like, I know that, but like, how do I explain that?
You just go back into court on speaker.
Right.
Boatright has something
So
to
my
say.
CPA said, so anyway, but that's what it is. That's what this whole thing kind of comes down to. And it's important because there can be huge ramifications, right?
Yep.
If you got someone who, I see this, it's not often, but I see it's not uncommon, where the parties just haven't paid taxes. Right?
It is surprising how
that is
many
way
people.
more common than you think.
Yeah. Like, they just have not paid taxes. And so they go to get divorced and they're like, yeah, so we haven't paid taxes in 6 years. And he owns a sole proprietorship, right? So, like, you know what I mean? And so
That's when we get new clients that come in and they say, I have many past year returns. I'm way behind.
Right, yeah.
My first question is, are you getting married? Are you getting divorced? Are you
right.
buying a house?
Right.
Because generally those like big life events, other people are going to come in and say like,
I need taxes.
some
I need tax
taxes,
returns,
right?
yeah.
And then they're like, oh, like, I guess I can file those. And they're like, oh, I didn't make any money. But yeah, they got a 1099 or they're working on for themselves. And yeah, there may not be a lot left over, but you also did not pay any tax on that.
Right. You didn't pay any tax on the income that you actually that you burned through. I have to ask this question, and I have to ask this question because I one time facilitated this for you, and it made me happy when I actually saw it go down. How many times do people bring just shoe boxes full of receipts to you in 2025?
It was a boot box, I think.
So we've kind of changed our practice a little bit.
We've moved forward
as a firm.
Okay.
But yes, when I was definitely getting started, and my office used to be in Round Mountain, Texas, that was fairly common. Yeah. The boot box, I know that was a big.
Yeah.
That was for y'all.
Yes.
It was like, oh my gosh, look at this boot box. We had an old rancher who every year he would bring it in a bucket.
In a bucket?
5-gallon bucket.
Feed bucket.
And just. And show up unannounced, right? Just
here I am.
I'm
he
here.
knew, and he'd come in, and and he lived in San Saba, and he'd come in and say, "Yep, got my tax stuff here," and it was literally a bucket, and he would throughout the year would throw bank statements, feed receipts, and just like everything. It was just full of and it was just kind of like.
Thank you.
All right, we just throw it on the.
I was going to say, what do you do? Do you just turn it over and dump it out?
Dump it out on the table.
And start sorting
sort
through
it all out.
I love it.
The actual amount of work that was involved with that particular client was pretty minimal.
Right.
It was all basically on his bank statements. but he felt like it was very important to have everything in the bucket, which was good.
We actually, for a long time, we'd sort of been at the forefront of what I consider to be the forefront in our field of utilizing technology. But I think in 2026, we're going to go to the feed bucket method. Yeah. And we'll just throw all the clients
virtual
feed buckets. Yeah, what do you think?
I think it's great.
You think it's a great idea? That's fantastic, right?
Holly is in charge now.
Holly's in charge. Yeah, Holly's in
She's
charge.
She's not going to let that fly.
So let me ask a couple of questions. So we're going through the divorce, husband, wife. And what should they be looking at? What should they be doing or thinking about as far as tax ramifications during the divorce?
Yeah, I think that so many clients or your clients would get hung up on the overall tax due, right? And so that's where you get into this tension because generally filing a joint return will result in the least amount of overall tax due combined between the parties,
right?
But it comes with that. Each party's on the hook potentially for the entire amount. And so you got to balance the total amount of tax due with who is going to be liable for the tax.
Right.
Now, in the state of Texas or any other community property state, there's this allocation that you're supposed to do where there's this legal theory, right, where every dollar earned by the marital estate is earned half by each of the spouses. And so it's even filing a separate return, if each spouse knows about the other spouse's income, you're supposed to split it. 50-50.
50-50. So it doesn't matter. One made $200,000, one made $20,000.
You're supposed to combine it, and then each one
get 50%.
50% of it if they know about it.
Right.
And that's another. So there is a real thing called innocent spouse relief.
Man, I'm so glad you brought that up.
That
I got so many questions.
So, yeah, that's a real thing.
Right. And I'm innocent, by the way.
I know you are. Yeah.
That's not the deal we had at all.
That's my spouse.
But one of the keys to the innocent spouse is that you do not have any knowledge, right? Like you don't have any idea what this other spouse was doing in terms of like being fraudulent or investing in some kind of tax shelter, whatever. Right. Which that does happen. Like I'm not discounting that, but it is not a carte blanche get out of jail free card.
It's a little rare.
Yes,
it's a little rare.
The level of because in order to file for innocent spouse, you had to have filed a joint return in the first place, and then the injured spouse, the one who didn't know or didn't have any of the benefit of the income, who's trying to be assessed by the IRS, can say, "Hey, look, I didn't know about this."
Right.
And then they got to prove it's a pretty high standard of proof that you have to meet in order for the IRS to let you off the hook.
We do that. We hear that all the time. And oftentimes it's I didn't know what was going on with the taxes, or he took or she took care of all of this, and now I don't know, and now we owe $50,000, and so we talk about that all the time. I want to ask I don't want to get too granular because I don't think it necessarily matters for because I think it's going to be fact specific for each individual. But what's that process? They file something, they do something. How does that even work?
Yeah, it's actually at the time when the IRS is trying to collect. So
Okay.
say that you are thinking about that joint and severable, IRS, whether it's a full audit or just like a computer generated audit, and they come back and say, actually, for this past tax year, and it might have been pre-divorce, right? So the divorce might have already been finalized. Hey, you owe $50,000. Okay. Each spouse gets that letter.
Right.
And one of the spouses might have wherewithal now in their new life, and now they have a levy or they have some sort of collections actions against them from the IRS. Their response to that, they have to respond to the collection action with the innocent spouse relief form.
Nice.
And they fill out
They fill out a whole
a
bunch.
lot of information. And it is not just financial information. This is like personal information.
Right.
Domestic abuse. I mean, there's all
Right.
kinds
The
of
whole
stuff
thing.
where you can go through and request
Right.
relief under this innocent spouse rules.
Interesting.
wow.
Interesting. Do they need a CPA to do that?
They don't need one.
Do you need a lawyer to get divorced?
I mean, no.
Yes. So having somebody, not just, CPAs, I feel like we are the most qualified to
Right.
provide a lot of the financial
Right.
questions that people have about their not just their income tax, but just life in general,
Right.
financial lives. When it comes to collections and IRS controversy work, somebody who works and does that type of work is really who you need to be dealing with. Yeah.
I think that brings me to a good question or a good spot, which is, as I said earlier, you got husband and wife that come to you. You're doing their taxes. You've done their taxes for 10 years. They get divorced. They start going through the divorce process. Can you still do their taxes? At what point can you not do their taxes?
Yeah, that's a great question. So I know that attorneys, like you guys, have pretty severe and strict conflict of interest
Yep.
policies, right? Just in the discharge of your responsibilities. Generally, when my clients come to me, we are united front against the IRS,
Yes, right.
And so,
you can help everyone.
so it is not antagonistic between the parties.
Right.
But going through a divorce, it can be that way.
Yeah.
And so kind of getting out of that mindset of, hey, we are helping, we are all on the same page, we're all on the same team, working against, to save them the most amount of tax. Sometimes that's not the case. And so being able to step back and recognize when there is adversarial relationships between my own clients,
Right.
at that point, yes, I need to tell them, hey, there's a conflict, and then I might not be the resource for you going forward.
Right.
So what about post-divorce and these people move on with their lives? Can you still be the CPA for both former spouses?
Sure. Yeah, that's happened and has continued to happen. It's not common, I will say.
Any cautionary tales or reasons why they shouldn't do that?
Well, if they don't ever want to see the other client, or if there's any type of intermingling or anything,
It's always easiest for Boatright CPA to schedule those two appointments back to back.
Yep.
And so that way.
Overlap.
we want to get them in together at
Yeah.
the same time for efficiency.
Yeah.
Absolutely.
There you go.
Yeah,
That's
right.
nice. That's nice. It's really that's an upgrade, a professional upgrade for
That's
them.
right.
Yeah, it's nice, man. I like that.
But no, I have been the same way that you have people fight over goats and other things and
yes.
division of property.
We did have a goat case.
Yeah.
I am often at the center of who's going to get to keep using the CPA.
CPA,
going forward.
they fight for
Oh,
you.
nice.
They fight for you.
That has been I've had to just kind of say, I'm not going to pick you.
Right.
That's not my decision. You guys can.
Y'all figure it
make that
out,
decision.
or neither of you, right?
Right.
So that's fair. That's fair. Post divorce, you got a spouse that say maybe wasn't the breadwinner, wasn't really the one that dealt with the taxes and that sort of stuff. What would your advice be to that person moving forward?
Yeah, that's extremely common.
Yeah.
Not just with divorce, but especially with death, right? Anytime you have a joint household and the financial expert within of the couple, if
Right.
they are no longer there, we consistently recommend to our clients that they have a team of trusted advisors. This team, right? Of course, I think the CPA is the quarterback.
Right,
That's
is the
soon to be
most important.
quarterback. That's
Right.
right. Yep. But it also involves your financial advisor, generally an attorney also, and any questions about any of your financial wherewithal or decisions can be kicked to the team, right? And again, because the CPA role kind of covers and has access to and is adjacent to the other two, if there's a question that is pertinent for the financial advisor, it gets kicked over to them. Yeah. If it is a truly a legal question, then it goes to the attorney. Yeah. So that's my recommendation for those spouses that find themselves in a decision-making role that they have not been in the past.
Yeah.
And so do you think is this just for people that make 7 figures, or is this for people that make 5-6 figures as well? Tell us a little bit about
I like that framing of that question, because even within my staff, right, we deal with, we do these tax returns one after another, right. And you might do one that we sent a couple of extensions this year with more than $1 million in tax paid. Right. And then right after that, we were sending some extensions with, $1,000.
Right.
To each one of those clients, their money is extremely important to them.
Right.
That can never be ignored.
Right.
It has to be at the forefront of our mind as professionals. Yeah. It does not matter the scale of the income. It is, their lives are truly important to the client.
Right.
No matter what level of income, the wherewithal, it is important to them. It is severe to them, whatever the outcomes are.
Yeah.
So you need a good team regardless of your income.
Regardless, that's right.
Okay.
What's the best way to not pay taxes? Can we just get?
I just feel around tax time you walk into the office and we yell.
No, seriously. When we're talking about coming out of when you're coming out of divorce and that sort of stuff. You've got 2 spouses on the other end. Anything need to change in particular that you commonly tell people, or?
Yeah, I mean, it's not as cool anymore. Cool.
All right.
I hear the wrong word with the alimony rules, and used to be the alimony was deductible and includable. Deductible by the payer and includable by the receiver. It's not the case anymore. Child support payments, of course, are non-taxable. So as the recipient, right? It's like free money falling out of the sky.
Right. They don't have to pay taxes on it.
Don't have to pay tax on it.
Right.
For the payor, though, those are after-tax dollars, and so you need to be able to plan. And in the budgeting side for the spouse that's burdened with making the payments, they need to realize that those are that is not a deduction, right?
Right.
So they need to be able to plan accordingly.
And be able to pay their taxes and do the stuff. Right. So you have to pay your taxes.
Yeah. In America, if you do not pay your taxes, they'll throw you in jail.
So you tell us that.
All Wesley Snipes.
But then we get all these clients that haven't paid in 6-7 years, and I immediately run to your office and say, I don't know why we keep doing this.
That's 100%.
When you do have a situation, and I've had this recently, where you've got a situation where husband and wife were running a sole proprietorship, really just didn't pay taxes the last 4 years. How difficult is that for you to go back and sort of reconstitute, those years, those tax years, and figure out the tax liabilities or otherwise, and kind of get them back on the right track?
Well, a lot of it depends on the quality of the records, right?
Well, that comes in a bucket, so there you go.
So that makes it more difficult, and with difficulty just comes time and cost, right?
Yeah.
And so Yes, people come in, they're like, I want a divorce tomorrow. Here's 4 buckets for each of the 4 years. Well, that's unlikely that they're going to be able to get that work done on it, by their timeline. And the backwards looking tax work, that like when I first got into the business, that was tax work. It was all backwards looking.
Right.
And we get the stuff at the end of the year. Hey, this is what it is, good news, bad news, whatever. Right. We didn't really have a lot of visibility into what the clients were doing.
Right.
That has really shifted to now the best tax advice that you can get, the best relationship you can have with your tax advisor is a proactive, forward-looking, in the year, for the year.
Right.
So it's not just about how can I not pay any tax, or can I write that off, or whatever.
Right.
It is about ordering your footsteps, planning ahead,
right,
so that you know what to do next, not what happened last year or 2 years or 4 years ago or whatever.
This?
Right. And that is I've had so many conversations, thousands of conversations with clients. Did you get this? Did you write that up? What about this? And it's like, that is tiresome.
Yeah.
And so,
yeah. And really, to be honest with you, I assume also going backwards like that, you're kind of stuck with what they did or didn't do.
Absolutely.
Right? Because there's no, there's very limited fiction that can be written backwards, right? Because you either did it or you didn't. You made, if you made 20 million, you made 20 million, right? You either got the expenses to do it or not.
Most commonly, it is like I spent money on this thing because I heard I could write it off. I've had that conversation more times than I can remember.
Yeah.
And when it is a backwards looking discussion, that money's gone.
Right.
I bought the lake house. I thought I could reinvest the proceeds from my whatever, and I bought this thing. I thought I could write it off. I heard on TikTok that I could write it off. And I'm like, well, no, you can't. And now they owe tax, and they don't have the money, like they don't have the cash because
they bought the thing.
because they spent something. They spent it on something, right? Where if we had the forward-looking guidance, we would have said, okay, instead of spending all of the money that you have, we'll spend 80% of the money, and then you've got the cash to pay your taxes, and then you don't have to worry about it.
Right. And move on.
And move on.
That's
right.
I will tell you, I'm surprised that this was so riveting. I really thought at some point we'd have
Talk to your CPAs. We're real people too.
Well, you notice we put coffee in the bourbon, so we kind of knew this was coming down the line.
That's all I see Boatright drink here.
It's
coffee.
Coffee.
So
I
drink a lot of coffee.
This coffee. No, sincerely, I've enjoyed it, and that's exactly the insight that we're looking for. More importantly, people want to get a hold of you to get on the wait list to be your client. Right, there's a wait list now.
There is
right?
a wait list, yes.
Right.
And we have a client intake questionnaire on our website. You
Nice.
can please go on there and fill that out, and then our office will be in touch with you.
Unless you click buckets, and then they're not going to call.
Don't bring it in a 5-gallon bucket. That's right.
And to find you online, that is
BoatrightCPA.com.
fantastic. Jay, you good?
I'm good.
Jay, I'd like to talk to you a little bit after this about your concern about the statute of limitations for fraud.
That's okay,
you
because I'm
had.
innocent, but
She's got a good CPA.
Oh, there you go.
We're good.
Guys, I hope you enjoyed that. That's our talk today. Episode 28, Cases and Cocktails, a little bit of time on taxes there with Mr. Michael Boatright. Boat, thanks for being here.
Appreciate it, guys.
Appreciate it. Guys, y'all stay tuned for next week, and we'll see you then.
Be sure to like, share, and subscribe. We'll see you next Friday.